I've been buying gold and silver for around 15 years now. And some of the most common questions I get from new investors are the following. Has it been worth it? Have you made any money on it yet? Does it really help fight inflation? Should I buy coins or bars? How much should I buy? I'm going to give you the answers to all these questions and a lot more in this video. You all ready to do this?
Thank you all. God bless you all. Let's go lick the world. Let's get it done.
What?
Joe, relax. Appreciate the motivational speech, but no one knows what you're saying. We are not going to be licking the world. Moving on. So let's first talk about if my investments have been worth it and how the returns have been. So here's a 20-year chart of gold prices. I started buying gold around 2009 to 2010 area when gold was about $1,000 an ounce or so. Now, of course, the price is over $2,300 per ounce. Even though I was fairly young at the time, I really remember the 2008 financial crisis worrying me. And I was in search of something that would protect me after witnessing a lot of friends and family lose a lot of money very quickly. And I actually made a fairly large purchase of both gold and silver during this time. You can also see in the chart in the top right corner that gold went up 500% over the last 20 years, actually over 500%. Not a bad return on investment. But again, I didn't just start buying gold in around 2009, 2010. I started buying silver as well. Here's the silver 20-year price chart, and you can see that the prices around that time frame were a little under $20 or so. Right now, the price is about $28 per ounce. You can also see over the last 20 years, silver has done almost a 400% return on investment. Let's take a longer look though, right? Let's zoom out a little bit because this ties into the question of, do precious metals really fight inflation? And if so, how much do they actually fight inflation? Well, let's start with what's happened with gold in the last 50 years since we left the gold standard in 1971. As you can see, the value of gold has steadily increased since we left the gold standard in 1971. If we drew a line from the bottom in the early 1970s to the top, which is today, we get a beautiful line that shows the constant upward trend. Sure, there are steady ups and downs throughout the years, but as you can see with our drawing, there's a steady line going up. And the return has been over 3,400% in that time frame. A lot of people make the mistake of waiting for the right time to buy precious metals. And although that plays into my decision to an extent, I've consistently really bought over the last 15 years. I may buy, a good amount more or a good amount less during certain time periods, but I'm still consistently buying. Because as we saw from that chart, the prices will consistently go up over time, even if they're doing a little bit of down and up throughout a couple years or few years. All of this really ties into the question of, do precious metals really help fight inflation? Are they a good hedge against inflation? As you know, in the end, we're all trying to make as much money as possible, or I should say, lose as little as possible. Let's take a look at how the dollar has fared since we left the gold standard in 1971. So this picture is from our friends at financialmirror.com, and we can see the dollar has lost 86% of its value over the last 50 years. Wow. So remember, gold has gone up over 3,400% in that time frame. The dollar, on the other end, has lost 86% of its value. So you tell me, does gold sound like a good hedge against inflation? Yeah, I think so, and silver's right up there with it. Now, Joe, you've done a lot of things that has devalued the dollar. Bidenomics was a complete disaster. You've bled the value of people's hard-earned money. What do you have to say about this?
Once in a while, I make a mistake, not like once a speech, but at any rate, years ago when I started talking to this for this job, I said, "Please take your seats." There weren't any seats; everyone was standing.
And that's a perfect example of why you do not want to be holding lots of dollars, unless you like losing money, of course. So here's some of your answers. Yes, it's been very worth it. Yes, I've done very well with my investments. And yes, it's absolutely a hedge against inflation. And anyone that's studied the history of money is not surprised by this. When you go to a fiat money system, well, people's greed naturally kicks in. You print money that requires no work behind it, and this leads to a domino effect. It leads to inflation, which eventually leads to hyperinflation, which eventually leads to the collapse of the currency. This has happened many times. Money never works when there's no work behind the money being created, period. So let's get to the last part. Should you buy coins or bars, gold or silver? How much should you buy? We've done videos on all of these things in greater depth if you want to learn more about it, but I'll kind of shortly lay it out right here for you. When it comes down to coins or bars, it doesn't matter a ton. I have a lot of both, although I've been collecting more coins than bars lately. Look, you're winning if you're buying either one. Well, gold's like the big brother, right? It's done better over the last 50 years and it's more stable, so to speak. But on the other end, silver has the potential to absolutely explode. And of course, silver is cheaper. Now, on the other end, gold's easier to store and silver can get very heavy as you accumulate a lot of it. You just have to weigh all these things to determine what's the better option for you. I can tell you this though, either one is much better than holding a whole bunch of cash. Now, how much you should buy is a tricky one because it depends on your situation. Now, if you're a person who's living paycheck to paycheck, I highly recommend that you buy a little bit each week. Whether it's $20 or $50 or $100 worth, just get a little each week. What you'll see is that you'll quickly build a real savings account. Whereas otherwise, that money you're building and saving and creating that real money in a real savings account would have been spent elsewhere as cash. You are much less likely to spend it when it's in precious metals, in that real money. Those precious metals kind of act like a barrier because in order to spend that money, you have to go and sell it and then spend it. So there's a lot more work involved to spend it, and it's harder to spend gold and silver. Just you don't want to hand it over. And if you've never touched it before, you'll understand what I'm saying. It just feels different when you touch it. You don't want to get rid of it. Now, if you have a larger income and a 401k, there's a few different options. So if you're one of the people that thinks stocks is due for a major correction, like I do and like many others do, well, you may want to do a partial 401k rollover into precious metals. I know people who did this back in 2007 and 2008 when the financial crisis was going on of 2008. And instead of, cutting their money in half, they doubled their money. And even if you do this or, whether you don't, you may want to still mix in physical metal purchases. And the amount is just going to depend on your fund availability. But I'd pick a certain percent, whether it's like 5%, 10% on the physical side and just run with it. So as far as like the major lesson that I've learned over the last 15 years buying gold and silver, it's the following. And it's that, it's a great hedge against inflation, and it's been proven throughout history for thousands of years. And it really protects against our greedy government and all the other higher ups that are kind of blindly stealing our money. Most people don't realize what's going on, but your money is being stolen, especially if you hold a lot of cash, and it's being done through inflation. And again, most people just have no idea that this is going on. So I hope this helps you in your investment journey. Place a comment. Let me know if you have anything to add. Make sure you subscribe. Talk soon.